So let's bring in Wedbush Securities head of equity trading, Sahak Manuelian. Sahak, great to have you on the show. It's like a smorgasbord, this market. There's something for everyone here. I mean, look no further than the data this morning, right? You had ISM manufacturing with an inflation read in there, big drop in prices paid. That was positive. But then the jobs data, ADP today, much stronger than expected. Your take?
Yeah. Hey, Morgan. Thanks for having me back. For sure, something for everybody. We saw the JOLTS jobs report earlier in the week, and we saw the ADP employment change this morning, which was solid. And then to your point, the prices paid component this morning showing inflation kind of coming, under control, if you will, or certainly starting to wane some. And then we also saw CPIs overseas in Europe. Eurozone CPI came in lower, and earlier in the week we saw Spain, France, Germany all report lower CPIs. And again, it's a lot of the bullish narrative around earnings and earnings releases, and we see the markets creeping higher. Folks aren't necessarily positioned for what we're seeing, but there's been a lot of bullish tailwinds behind companies and companies' reports. And we've been talking about some of these, like cost cutting, productivity, efficiency, some of the FX headwinds abating, supply chains normalizing. And so report after report after report, one really loud or glaring theme has been margin improvement. Margins are getting better, and we think that continues. And we think that stocks are in a pretty decent place. And coupled with the technical backdrop here and overly negative sentiment, although maybe some of that's starting to abate too now. We like equities into the second half of the year. Things will continue to be choppy, we think. It's still going to be very difficult to make money in this environment. You can't buy everything like many investors were used to over the last 3, 4, 5 years.
Okay.
But there's still some deals out there, we think anyways.
Yeah, I mean, and to your point, we're seeing it with Dell earnings, which came out in the last hour, came out early as well, right? I mean, cost cutting is part of what helped fuel the results there that ended up ending the day higher. But on the flip side of that, I mean, you have Macy's and Dollar General this morning and some weakness in those reports and cuts to the outlook as well. So it does seem to be murky going to the second half of the year. So when you talk about where you can make money in this market, where is it?
Yeah, things are, very choppy, to say the least. And so when you talk about retail and soft lines, it's tough. It's still a very tough place. I think, individuals are just spending money in different places. And you can take a look at what Visa and MasterCard have been saying, that the consumer's still pretty decent, pretty strong, still spending. They're just spending on different things. They're not spending on some of the soft lines that maybe they were previously, but certainly travel, leisure, some of these things are doing okay. We've seen the airlines recently reporting some pretty decent figures where travel has been strong. But, going forward and maybe trying to look into the second half of the year, we think, certain areas of healthcare look pretty decent, and I think there's a catch-up trade there to be made, especially within biotech and some of these mid-cap biotech names that have been completely trailing what a lot of the broader averages have been doing. And then within technology, I think, software certainly got some punches over the last couple nights here. We saw some of these software names which got, arguably ahead of themselves just in the month of May, starting to come back to a little bit of reality. But we still like some of these software names. We still like some of these AI plays. We just upgraded C3 AI this morning after this huge move that it's had. So there's still a lot of names out there, and some names that aren't that expensive, but it's just going to continue to be a stock picker's market. And we think that certainly healthcare is somewhere to look at for the second half of the year, and still certain spots of technology we think should continue to perform well.